Hey there everybody, Thomas Wood with ValueCharts.com, and we're going to go ahead and take a look at one of the trades we had earlier today in the futures live trading room. Now, as everyone knows, today was non-farm payroll, caused a little bit of volatility in some of the markets. Gold was way up, for example. But one of the trades we took was a short in the Nasdaq right after non-farm payroll. And the reason we were trading the Nasdaq short is we were looking at the highs and the lows on a 1,000 tick chart. So you can see here we had a high and then a higher low and then a higher high and then a higher low here. So this point right here was our higher low. And then we put in a lower high compared to the previous swing high. And when we broke that lower low, we were then saying, okay, now we're back in a downtrend on the 1,000 tick chart. So that got you short on a break below 41.70 and a half. And then you can put a lower low, breaking these lows, and then a lower high, and then lower low, lower high, lower low, lower high, lower low, all the way down. You kept stair-stepping down, just like a market should when it's trending lower. And we had a target, we actually had a target of 41.35, and you can see the low of the day was down at 41.36. Now 90% of the people covered right here when we came right down to the 36, 37, 38 area. And the reason being, if you look at a longer term chart, you can see you had a nice trend line going all the way up and across the lows here. And we were saying the overall trend in the Nasdaq is technically still up because we still have overall higher highs and higher lows. And that this trend line was support, and the support was the target for the day trade. Worked out really well. You were able to take out $600-700 a contract, able to have a reward risk ratio of about 6 to 1 because you're only risking about $70 to $100 a contract on the trade, which that's exactly what we want to see when we're trading any type of market. You want to have a very good reward risk ratio because it makes it a lot easier to actually be profitable and consistently be profitable. So then you can see the trend actually reversed here in the Nasdaq. Here's your higher high and then a higher low, higher high, higher low, higher high, and now we're pulling back, potentially going to be reversing to a downtrend again on the 1,000 tick if it breaks through this low here. But this is just one example of a really good way that you can trade these markets based on just pure price action, highs and lows, because every downtrend is going to have lower highs and lower lows, and every uptrend is going to have higher highs and higher lows. If it doesn't, then it's not a trend, it's just a choppy market. So that's all I have for you for today. Hope everyone has a great weekend. Don't forget to visit ValueCharts.com to sign up for a free trial of either the futures or the options equities trading room. We would love to have you in there. And until next time, happy trading.